Today I'm going to show you a simple and easy strategy for you guys to dominate the forex markets. I personally use it myself. I just analyze everything from the monthly, weekly, daily and 4 hourly, and then enter maybe on the 4 hourly and the 1 hourly time frames. Super simple to use, and trust me, it's very powerful as well. So if you do enjoy this video, make sure to smash like and let's get down to business. Right, so this is the CAD Japanese yen currency pair. Always we analyze from the monthly time frame, since we want to back work everything and then understand what the hell is going on the forex markets, right? So as you can see, it's currently trending towards the downside. We could potentially trend like this as well, but generally I like to keep it clean. Let's say we're trending towards the downside like that. Also, the moving averages are above the candlesticks, which means that the market is currently trending towards the downside, and it is, right? Every time it reached this area zone, we had a lot of movement in here, and every time it reached that zone, it shot towards the downside, right? So now that we cleared this up, right, we can move on to the weekly time frame. What's happening on the weekly, right? We have, we can see everything much more clearer. Multiple times it touched this area zone. Every time it touched, as I said, shot towards the downside. That's not the strategy as of yet, but as we can see, it's also trending towards the upside as well, so currently giving us a squeeze pattern. We can see everything a little bit more clearer if we have a look at the daily. Just a quick tip, always if you're analyzing, let's say on the weekly, and just see candlesticks like this, don't just draw a trend line like I just did now. I knew there's a trend line, but if you're new, you won't be able to draw an accurate trend line. It just takes practice. So go into the lower time frames where you can actually see the candlesticks kind of moving a little bit more, and that's where you draw the trend line. So this is the daily trend line over here. We can even mark it daily uptrend, right? So we mark this one. We also can mark this one over here, 𝗙𝗔𝗥 monthly downtrend, right? So we marked everything over here, monthly downtrend, daily uptrend, right? That's very important, right? So what's currently happening? It's currently trending towards the downside on the monthly time frames. We can see the moving averages are above the candlesticks, as you see it over here. Weekly, what's happening? Weekly is actually breaking these moving averages, so it's actually trending towards the upside. That's very important. Since it's Sunday, it doesn't show that it's a new candle, right? And definitely has been broken, and by Monday you will see a new candlestick over here somewhere forming, maybe breaking towards the upside or the downside in this case, right? So currently trending towards the upside on the weekly and the daily time frames. What's happening on the 4 hourly? This is the time frame where we generally want to enter a trade. So the daily obviously uptrend is here. We know it will be respected multiple times. So what's happening currently? I actually placed this trade on my own with my VIP trading signals group. Why did we place this trade? Well, it was a nice bullish engulfing candle close going towards the upside. We also placed this trade because, as you can see, it was making new higher highs. This was a new higher high as well, so more than likely after each higher high, usually how the markets react, as you can see, after a push, exhaustion, after a push, exhaustion, after a push, exhaustion, a slight exhaustion. In this case, it kind of shot up a little bit more, but yet again push towards the upside. So this was a actual trade I placed on CAD Japanese yen currency pair. It profited around, let's just have a look how much it profited. I forgot, around 60 pips profit currently, so that's very nice indeed. So what should we be doing on the 4 hourly time frame? Well, since we want to enter trades over here, it started to steep a little bit, so we want to draw this steep trend over here, and I believe of drawing much steeper trends. Why I believe drawing steeper trends is much more important, let's say steeper downtrend or steeper uptrend, is because you start to understand if it trickles towards the downside, that this area zone is super important, especially when the 25 and 50 moving averages are shooting towards the upside as well. We also have this steep uptrend over here, so more than likely, if this is gonna turn around anywhere, it will probably be this zone over here, right, and shoot towards the upside yet again, retesting this zone. Or if it doesn't shoot towards the upside and retest this zone, and we do get a bullish engulfing candle close, let's say we got one over here, that's why it shot towards the upside a little bit more. If we potentially get, you know, a nice pullback, maybe till this area zone. Then we could potentially enter again for a nice buy trade towards the upside for a potential new higher high push, and then obviously get respected somewhere around this area. If it doesn't respect it, then it will just shoot towards the upside even more, reaching, you know, the 160 pips mark, and obviously the psychological level of 82.000, right? Very big psychological level around this area as well, which should be an important case. But obviously, if we have a look with the horizontal line, where's the 81.000 zone? This is a psychological level that I've just drawn. It's usually highly respected, like zones such as 81.000, 80.000 is even more respected. These round numbers, basically banks use them. It's an easy number to remember. Basically they use them to turn around, start selling, start buying in these cases, and that's why it's very important to notice all psychological levels. So we know that this trend over here, this downtrend that we see, you know, as you can see, this huge black line that I have, this monthly downtrend is there, and we also know that the psychological level is there as well. So we know that this zone over here is very important, and more than likely it has a lot of sell pressure in here. So if it breaks towards the upside and has a pullback, then we're potentially shooting towards the upside for potential, you know, 160 pips profit. But in this case, if we want to re-enter this trade, let's say somewhere around this area zone, you know, let's say if it pulls back a little bit towards the moving averages and give us a bullish engulfing candle close, it has to be a bullish engulfing candle close, and it has to be a candlestick close. It can't be just a bullish engulfing candle and every time you trade you have this little timer before a candlestick closes. Obviously now is Sunday when I'm recording this video, so there's no timer, but usually when you trade in the forex markets Monday to Friday, there's a little timer. Let's say you're on the 4 hourly and there's like 2 hours left and the candlestick is currently bullish, but in 2 hours it could, you know, change direction. You need to wait for the candlestick closure. After it closes as a bullish engulfing candle close, let's say something in regards to this, as you can see, this bullish engulfing candle close, one candlestick was red, the other one is green and much bigger, is a bullish engulfing candle close, also a new higher high as well, shooting towards the upside. And that's why we could have potentially even made 15 pips somewhere around here. Now currently pulling back, very likely it could be shooting towards the upside. However, we need to remember that sometimes it does pull back a little bit more, and this is why we have a huge stop loss. So let's say if we potentially traded somewhere around here, this could be a risky trade. Why? So let's say we entered somewhere around this area, our stop loss is 80 pips. It's quite big, right? It's shooting towards the upside. Now we entered this trade, you know, we saw this movement, but now it's pulling back a little bit. It's a risky trade because it can trickle away towards the 4 hourly, you know, uptrend over here, the moving averages, and really it can touch it because that's how the market moves, right? It shoots towards the upside, touches it, shoots towards the upside, touches it, and that's how it follows the moving averages. As you can see, a nice example over here, shot towards the upside. Where did it pull back? Towards the moving average. Shot towards the upside, new higher high, boom, towards the moving average. Now shot very steeply towards the upside. Where do you think it's gonna pull back? More than likely the moving averages yet again, and this trend line, 4 hourly trend line that we have established as well, the 1-2 free touch pattern. If you don't know what it is, basically every time it touches, let's say over here, 1-2 free touch pattern, every time free touches happens, pretty much confirms a nice uptrend. In this case, it's a nice uptrend. Very likely it's gonna, you know, shoot towards the downside before shooting towards the upside yet again, retesting this zone. However, there's also another thing. If this steep trend does continue and reach this area zone and starts to fall down, then it could be a risky trade to even trade a bullish engulfing candle close because it already reached the monthly area of sensitivity. And if we have a look at previous data, every time it touched, it plummeted down yet again. So it's currently, you know, against a daily uptrend on a monthly downtrend. So, you know, on the long term, monthly downtrend is still winning and is still trending towards the downside. So we need to be aware that, you know, the sell pressure definitely, you know, can come in. So sellers could be somewhere around this area zone. so we need to be aware of that. However, if it just pulls back, you know, around this level over here and then goes down, then we probably have a nice another move towards the upside. So it's currently forming a little 4 hourly and the monthly time frame, as you can see, shooting towards the upside and the downside. And once it breaks this area zone, then we could potentially do a vice versa. Basically, if it breaks this area zone, we have a look at the daily. If it broke the daily moving averages somewhere around this area zone, as you can see, I've just drawn too much. Let me just remove everything. If we just have a look at the daily now, right? So the daily moving averages are here. So if it breaks this 4 hourly, you know, uptrend that we have, then more than likely we can shoot towards the downside for a retest of this daily uptrend that we have. And yeah, this is basically how you would analyze the currency pairs, and trust me, it works. Hopefully you guys understand. Use the 25 and 50 moving averages. Super simple and easy strategy to learn and begin trading profitably with, and trust me, it works. I use it myself and I do it pretty damn good. You just need to know all the fundamental news and technical news as well, and you will be banging out trades like no other. If you want to see more of my videos, you can join my other channel where I have a lot more videos on price action trading and just a ton of live trading as well. It's called FX Trading Lines. Make sure to join this channel as well. Subscribe, like this video, share it with your friends, and join my VIP Trading Signals group. We're literally dominating the markets. Over 400 VIP members and 2,000 free members. It will be the first link in the description down below. And take care, guys. Have a wonderful day. Stay safe and goodbye.